Good afternoon. Welcome back to Passion World Talk Radio Network, a wholly owned subsidiary of Global Media Network LLC. Educate, enlighten, entertain. And in this episode, we are going to do you remember this? 2025 is not that old. And the article reads, and it is from our chart, Robert Kiyosaki just warned millions will be wiped out in biggest crash in history, but says do this to become very rich. So, what is he saying? The author, Robert Kiyosaki, of Rich Dad, Poor Dad, issued a warning to investors claiming that the biggest crash in history is imminent and could unfold throughout the summer of 2025. He referenced his 2013 book, Rich Dad's Prophecy, and asserted that his long-standing prediction of a historical financial collapse is now coming to a community near you. This comes at a time of extreme market volatility and uncertainty due to ongoing trade wars, high interest rates, inflation concerns, and more. However, there is light at the end of the tunnel, and he says that if investors are willing to invest intelligently and capitalize on the current opportunities the market is presenting. Yet, in the next breath, his message gets targeted towards us, the baby boomers, who he believes is at the greatest risk, and he predicts that millions in our generation could see their retirement savings and investments, quote, wiped out, unquote, as stocks, bonds, and real estate markets tumble. Quote, crash time is now and through this summer, he posted, emphasizing that the downturn will not be limited to equities, but will extend across all major asset classes. And amid all this chaos, he also forecasts a massive migration of capital into alternative assets, gold, silver, and the ever-popular Bitcoin, and with these assets serving as safe havens during the turmoil. He has singled out silver as the biggest bargain of 2025. He claimed silver, currently trading around $35 an ounce, is still 60% below its all-time high and could triple in value by the end of 2025. The biggest bargain today is silver. In 2025, silver made 3 times, he wrote, urging investors to buy physical silver rather than exchange-traded funds, ETFs, which he dismisses as fake money. Note, I consider Bitcoin fake money too, so we're even. Quote, silver is priced around $35 an ounce, which means almost everyone anywhere in the world, unless you're poor or struggling or never made that much money in the first place, has a chance to grow richer, while millions grow poor. And he's encouraged his followers to act decisively to protect and grow their wealth. And he says, take action or be left behind, unquote. So for those who are listening up to this gentleman, and for those who are proactive and shift their portfolios into what he calls real assets, may not only reverse their wealth, but could become extremely rich during the downturn. And he ended, unquote, he ended his tweet with a call to action. What are you going to do tomorrow? Grow richer or grow poorer? Please choose to get richer. So are we going back to the roaring 20s, and when the Dow Jones market fell in the 30s, people were jumping off buildings because they no longer had the funds that they had so adequately grown up with? Are you going to be like the Chinese and run into your backyard, and dig some deep holes, throw all your assets in there and cover it back up and hope and pray that the paper money doesn't corrupt. And also the popular saying that it takes money to make money. And if you don't have that proverbial money in the first place, you're not going to have it in the second place to invest. However, his critics pointed out that even though Kiyosaki has called 9 of the last 0 market crashes, he has also made similar calls in December of 2023, July of 2023, September of 2022, and September 2021. If first you don't succeed, try again. This track record suggests while it's good to be wary of market condition, it's unclear how much stock you should actually put into his latest warning. However, it's never a bad idea to consistently reassess your portfolio. Talk to your financial advisor if you have one. Adjust to the times and hedge your bets. So this is what you have to make sure of when you are taking a look at your portfolio. Problem number 1, the market is even more concentrated than it looks. As of the end of 2025, the top 5 stocks made up about 40% of the S&P 500, as valuations sat near 20-year highs. Problem number 2, returns hinge on one major factor. Depends on AI peaks continuing uninterrupted. Problem number 3, bonds aren't diversifying like they once did. Institutions are now reporting that stocks and bonds, a historically less volatile and risky investment mix, are now moving together more often due to risking risks across governments, rates, and debt. Problem number 4, the dollar quietly dropped 10% last year. Problem number 5, the usual safe havens are already crowded and overcrowded. Gold is making all-time highs. Real estate is still especially rate sensitive. So you're going to ask yourself, is that all there is? Is that all there is? Then let's keep dancing. Or you can assess what you can find in a billionaire's portfolio that you wouldn't typically find anyplace else. Well, for centuries, wealthy investors have devoted a slice of their portfolios to scarce, globally priced assets. Blue chip art, artists, Bisquet, Picasso, and Banskis. These trade internationally, outside of the stock market, and aren't completely tied to earnings or interest rates. And after the war, World War II, contemporary art has outpaced the S&P 500 over long periods, while showing low correlation to stocks and bonds. Really? Well, you need to take a look at Bezos and Gates, who have a small fortune to gamble on in our collection. So where would you even start if you had the money? Well, you could start with SEC qualified shares in museum quality artwork, with minimums starting in the thousands, not millions. So thousands of investors have already allocated over $1.3 billion across over 500 works. And Masterworks handles sourcing, authentication, insurance, storage, and sale. And your exposure to it on the Wall Street doesn't control. So that's one thing for you to think about. Please go over to passionateworldtalkradio.com/blog, read our summary, listen to this episode, and form your own opinions. But before you do anything, especially if you're in the middle of the road or Go talk to somebody who knows something that's really happening in this versatile market. Financial advisor, someone at the bank. And there's also plenty of people online who can help you, but make sure they're certified and they do know what they're talking about. So your call to action then is to go over to our website, passionateworldtalkradio.com/blog, listen to the podcast, read the summary, and yes, go contact a professional who knows what they are talking about and see whether or not they can have you protect yourself from the incoming fallout of the 1930s market here in the United States of America. Thank you very much for listening, and enjoy your weekend, and maybe it will warm up a degree or two. Thank you very much. See you next week.